Something is happening to silver right now that happens maybe once or twice in a generation, and the overwhelming majority of people, 95% of investors, 95% of the financial media, 95% of the people scrolling through their phones right now have absolutely no idea it is happening. Not because the information is hidden, not because you need some secret Bloomberg terminal or a Wall Street insider contact to see it, but because most people are looking at the wrong numbers, listening to the wrong voices, and asking the wrong questions entirely. And by the time the other 95% figures out what is going on, the people who understood it early will already be sitting in a very different financial position. Silver is being repriced right now, not next year. Not when the economy stabilizes, or when the Fed makes its next move, or when some analyst on television decides it's finally safe to talk about it. Right now, underneath the noise and the chaos and the headlines about everything else, the real price of silver, the price that reflects actual physical supply and actual physical demand in the real world, is separating from the paper price that most people watch on their screens. And that separation is the most important thing happening in the precious metals market today. Let's back up and make sure we're all starting from the same place, because the word repricing gets thrown around a lot, and it usually means very little. What does it actually mean for silver to be repriced? It means that the current price, the number you see quoted on financial apps, on trading platforms, on the ticker, at the bottom of the news channel, no longer accurately reflects what silver is actually worth in the real world. It means the system that has been used to set the silver price for decades is breaking down, and a new price discovery mechanism is starting to take over. And when that transition happens, prices don't drift gently upward in an orderly line. They move fast, they move hard, and they catch almost everyone off guard. Here's how we got here. For a very long time, the price of silver has been set primarily in the paper market. Futures contracts on the COMEX exchange, traded funds, derivatives, financial instruments of all kinds, these are what traders watch, these are what algorithms trade against, and these are what determine the price that most people see. The problem, and this is the problem that is now cracking open in real time, is that the paper silver market is almost incomprehensibly larger than the physical silver market. Estimates suggest that for every ounce of physical silver that actually exists, there are somewhere between 100 and 300 paper claims on that same ounce. That system works fine, right up until the moment that real buyers start demanding real silver in real quantities. And that moment is here. Industrial demand for silver has been climbing for years, but the pace has genuinely accelerated in ways that the market has not fully priced in yet. The solar energy sector alone is consuming silver at a rate that would have seemed almost unbelievable even 5 years ago. A single solar panel requires silver. Multiply that by the hundreds of millions of panels being installed globally every single year, and you start to feel the scale of what is being pulled out of the available supply. Then add electric vehicles. Then add 5G network infrastructure. Then add advanced medical devices, military technology, water purification systems, AI data centers that require sophisticated electronics. Every single one of these growth industries runs on silver, and every single one of them is growing faster than the silver mining industry can keep up with. Supply is not responding the way it would in a normal commodity cycle. You cannot just decide to open a new silver mine and have it producing meaningful quantities of metal in 6 months. The timeline from discovery to production for a major new silver deposit is typically a decade or more. Permitting, environmental review, infrastructure development, capital investment, it all takes time that the market simply does not have right now. And a significant portion of global silver production is not even primary silver mining, it comes as a byproduct of mining copper, zinc, and lead. Which means silver supply is partially hostage to demand cycles in completely different commodity markets. The supply side of this equation is structurally constrained in ways that are not going to fix themselves quickly. Now layer on top of that what is happening at the sovereign level. China buying 790 tons while prices were crashing. Central banks around the world quietly increasing their hard asset reserves as they reduce exposure to dollar-denominated financial instruments. The de-dollarization trend that has been building momentum for years now, countries actively seeking alternatives to holding U.S. treasuries as their primary reserve asset and turning instead to gold, silver, and other real world commodities. These are not small retail investors reacting to price movements. These are the biggest, most patient, most strategically disciplined buyers on the planet. And they are all moving in the same direction at the same time. What you are watching is the paper price and the physical price being pulled apart by forces that the paper market was never designed to handle at this scale. When that gap gets wide enough, when enough large buyers demand physical delivery instead of settling for paper, the paper price loses its ability to set the real price. And when that happens, the repricing event is not a 10% move or a 20% move. It is a fundamental reset of what silver is actually worth in a world that needs it desperately and cannot produce it fast enough. The 95% who have no idea this is happening are not stupid people. They are busy people. They are people who have been conditioned to look at the price on the screen and assume that price is accurate, that markets are efficient. That smart money would have already bid the price up if the opportunity were really as significant as this. But that logic breaks down when you understand that the smart money, the sovereign buyers, the industrial consumers, the strategic accumulators, has been moving precisely because they know the paper price has been artificially suppressing the signal. They are buying the physical while the paper price is still low. That window does not stay open forever. There is also a psychological dimension to silver that gold does not have in quite the same way. Silver has historically been the people's metal, more affordable, more accessible, the thing ordinary families could hold when they didn't have the capital to buy gold. That accessibility cuts both ways. It means silver has a broader base of potential buyers who could enter the market as awareness grows. And awareness is growing, even if slowly, even if it is still only the 5% who are paying attention right now. When it reaches the 20%, the 30%, the 50%, when repricing stops being something that happens in the background and starts showing up in prices that everyone can see, the move will already be well underway. You don't need to be a financial expert to understand what is happening. You need to understand one simple thing. When the price of something is being set by a paper market that is fundamentally disconnected from physical reality, and when the real-world demand for that thing is accelerating while the real-world supply is constrained, the paper price and the physical price eventually have to converge. They always do. The only question is at what level they meet and how fast the journey is. Silver is not being hyped. Silver is not the next meme coin. Silver is a 5,000-year-old store of value that also happens to be an irreplaceable industrial input for the technology that is supposed to power the next century of human civilization. That combination, monetary history plus industrial necessity, is what makes this repricing moment different from anything that has come before it. The repricing is happening right now. The only question left is whether you are one of the 5% who sees it while there is still time to act, or one of the 95% who understands it perfectly 6 months too late.